Hi, everybody. My name is Marco Byrne, and I'm the research director of GoldCore.com. And today I'm going to look at why you should buy gold, and you should encourage your family, friends, colleagues to buy gold in order to protect yourselves from the coming great currency reset. So it's quite an important topic. We covered the Great Reset in the last podcast. It's the topic du jour. So have a look at that video to see what some of our benign leaders have in store for us. But I wanted to look at there's so much noise out there and so much fear about the virus and the lockdowns and the vaccines, and there's a lot of there's a lot of noise and a lot of opinion and a lack of, I suppose, facts and data. So it'd be good to get back to the data and have a bit of evidence-based science in the world. And we've long prided ourselves on looking at the data behind markets, not just the gold market, but the wider financial markets, and how gold fits into the investment universe in terms of investment and pension portfolios, and also in terms of a hedge against currency devaluation. So there's massive risks in the world. They're building all the time. I think we're on the verge of some quite significant I don't think, I know we're on the verge of some massive changes in the coming weeks and the coming months. 2021 is going to, I think that's when we're going to see these resets, and particularly the monetary reset. So, but let's look at the data, because, there's a risk of everybody's going into their own respective positions, and it's all very tribal, shall we say, and there's the blues and the reds, and there's, it's a bit of a punch and judy show. So I want to look at the actual data, and it happens in the gold world as well, whereby there's lots of people who are very pro-gold. So-called gold bugs are very passionate about gold and how it can protect from economic crisis. And then there's other people who think it's about fear and it's irrational, not just metal, and why would you buy it? So let's look at the actual data from our friends in the World Gold Council, who we've worked with closely over the years, and they've done excellent research. Unfortunately, research that doesn't mainstream media, despite it being excellent and absolutely science-based and all the rest of it, because they're seen as a vested interest. Well, there's lots of vested interests in the world today, as we know, promoting all sorts of agendas and all sorts of profit-driven schemes, shall we say. So let's look at the evidence around gold and why, forget about what the vested interests like GoldCore would say. We would say that, wouldn't we? Let's look at what the research shows. And indeed, academics have looked at this research and have, came to the same conclusions, So there's a huge body of research now, independent asset allocation experts, academia, all confirming that gold is a safe haven asset. So this video and the research from the World Gold Council, this is something that you can share with people who are sort of on the fence or haven't understood gold's value up until this moment in time, whether it be financial advisors or pension advisors. So this is something that you can share with these people to try and help them about the importance of gold in the coming weeks and months. So without further ado, as they say, let me share. This is fresh research that has literally just been published today from World Gold Council. And they have previously done versions of this. So this is the most up-to-date version, and this is the version for Euro investors. But it applies the same principles, the same reasons owning gold are applicable, whether you're a British investor who has sterling exposure, or American investor, indeed international investor who has dollar exposure, or indeed a German, French, or Irish investor. So, but this one is more particularly to those investors, but the same reasons apply for everybody. So it's relevant to everybody. So this is the latest research just published today on the World Gold Council's website. We'll actually publish the link down below on the YouTube video and on our blogs on GoldCore. So it's the relevance of gold as a strategic asset for European edition. So that's for European investors with Euro exposure. God knows there is plenty of Euro exposure, and I won't get into the risks that are there today. That's for another day and another video. So Basically, the World Gold Council research is excellent, and it's just very matter of fact, and it's in fact evidence based. So, what makes gold a strategic asset? What makes gold a hedging instrument, and indeed a safe haven asset that protects against market risk, and indeed worst case scenarios, whether it be systemic crisis or financial contagion and monetary contagion. So, it's actually good to read that there. Gold benefits from diverse sources of demand as an investment, a reserve asset. So central banks buy gold, have been buying gold, and are the largest holders of gold. A luxury good, obviously, there's huge amount for gold as a form of jewelry, and more so in the Middle East and in Asia, where they buy jewelry, particularly in India, China, they buy gold as a store of value, not simply as a luxury good, and a technology component. So, and then it gives a little bit of a flavor as to why gold is this strategic asset and safe haven asset. It's highly liquid. So you can buy and sell it very, very easily Monday to Friday while markets are open. And indeed, while markets are closed, gold coins and gold bars can be sold by dealers. So it is highly liquid, no one's liability, carries no credit risk, and it's scarce, historically preserving its value over time. So this is something obviously we looked at. Gold's store of value credentials throughout history, every single financial crisis, throughout history. Gold has retained its value, and more often than not, it prestates in value, particularly versus fiat currencies. And fiat currencies are currencies that are not backed by physical gold. They are throughout history paper currencies, which kings and emperors have tended to abuse over time in order to fund their grandiose imperial visions. So, and there's plenty of grandiose imperial visions around the world today. So this is the money shot, so to speak. These are the four reasons to hold gold and to invest in gold. It generates long-term returns, and this is something that's often forgotten about because everyone focuses on gold as a hedge and a safe haven, but it actually generates very, very strong returns over the medium and long term of between 9% and 12, 13, 14% per annum over the last 15, 20 years, and also over the last 50 years in all the major currencies. So it's actually outperformed most assets. It's outperformed the bond markets and the major bond market indices in terms of returns, including US Treasuries, and it's also outperformed most stock market indices around the world over that long term. It acts as a diversifier and mitigates losses in times of market stress. So we've seen this the so-called Nasdaq bubble. There's actually a bubble in the wider stock markets as well. And the S&P 500 fell 50% in the 1999-2000 period. So a 50% correction. Then again, another 50% correction after Lehman Brothers 2008, 2009. And during those times, gold either retained a value or appreciated very significant value. And obviously 2008, 2009, 2010, and 11, gold appreciated every single year. So yeah, when Lehman Brothers happened and in the immediate aftermath in those successive years, gold outperformed other assets. Provides liquidity with no credit risk. So you're not dependent on the performance of the bank, of the company and its shareholders, of the government in terms of bonds. All these financial assets, you get a yield, but in order to get that yield, the counterparty has to be performing, and they have to be performing well in order to get a yield. But if they don't perform well, then you can get into difficulty, shall we say, and stocks can go to zero, as we know, and bonds, bonds don't tend to go to zero, but they can go to zero, and they have gone to zero. But there's very significant counterparty risk in the world today, especially given the level of debt that's on the balance sheet of the major economies in the world, especially the US. The US has 23, 24 trillion national debt, and then has unfunded liabilities for pension liabilities in particular, Social Security, Medicare, Medicaid off balance sheets. That's another 100 trillion. So when you get stock market crashes or indeed a bond market crash, that's when gold comes into its own and acts as a hedge. It goes up when other things go down, and you don't have the credit risk as well. And then, from an investment and pension point of view, it actually, it increases the returns over long term and decreases the volatility. And the risk-adjusted rate of return is actually improved. So it means that you're actually decreasing the risk in the portfolio because you have less volatility and you're enhancing the returns. And this is obviously a very, very valuable thing to have in a portfolio. And it also helps because it prevents and gives investors comfort whereby they don't panic sell and you don't see significant drawdowns. And frequently, this is what's seen. Investors fail to stay for the long term because there is a crash and they sell near the bottom. And then they don't actually benefit from the bounce, and they don't get the long-term benefits of the assets because of these what are called drawdowns. Whereas if you have that 10% allocation to gold, or 3 to 5% on the low side, it means that the investors can ride out the volatility and the market crashes that are seen more frequently than is realized. So, really, really excellent research. I encourage everybody to get it off the GoldCore. It will, as I said, have a YouTube video on the blog page. And a picture paints 1,000 words. And there's so much good stuff in here, but I want to look at one thing in particular, which is something that we have shared on a number of occasions in various formats. But it's ultimately, this in itself is quite interesting. It shows how gold has delivered positive returns over the long run, outperforming key asset classes. So look there, the long term, 20 years, so going back to the year 2000, gold has outperformed everything except emerging market stocks, which are obviously quite volatile. So that's a very significant outperformance there over the long term of gold. And there's other charts down below here. I won't go through them all, but there's other charts below that show how gold is less volatile than most traditional investments, and particularly stocks. It's less volatile than the S&P 500, the leading US benchmark for stocks. There's very few stocks that are less volatile than gold, and there's no stocks are less volatile than gold, and there's very few stock market indices that are less volatile than gold. I think the only one that is less volatile than gold is the MSCI World Index, which is the global index of some of the biggest companies in the world. So, I'm not going to really go through it all. I encourage you all to go through it at your leisure. But this chart says it all. Gold has outperformed all major fiat currencies over time. So, and what's interesting about this is, it's all currencies. It's been seen throughout history, and if you look back there at the red one in 1920, so that's the Deutschmark. So that is the hyperinflation in Germany after World War I, when they got themselves into massive debt. And as I already said, the debt in the world today is going parabolic because of the so-called pandemic, depending on your view, and indeed the lockdowns and how they're destroying our economies, and the amount of money that's being created today is just, it is on a par, if not more than, the Weimar Republic in terms of Weimar Germany, and their difficulties after losing World War I, in terms of the debt and the reparations. So their currency actually collapsed and went to zero. And if you look since 1900, there's been gradual depreciation. Obviously, around World War II, there's quite significant depreciation in all these currencies versus gold. There's a bit of stability there between the Bretton Woods period, 1945 and 1971. And then you can see from 1971, when Nixon went off the gold standard, all these currencies, massive devaluations in the 1970s. Gold went from $35 to $850 per ounce. Huge return in those 9 years. I think we're going to see similar returns in the coming years, if not more. Then there was a period of stability where gold actually fell in value in the 80s and 90s with the end of the Cold War, globalization, the opening of the markets, and economies around the world doing really, really well. Stock markets did really, really well. There was stability in the world, and gold prices fell, as you'd expect. Since 2000, I suppose there was the stock market and Nasdaq bubble. It was September 11th, and gold rose continuously throughout the 2000s, particularly rose in 2008, 9, 10, 11 after the Lehman Brothers near financial collapse. So we're in the end game here. I mean, we've already fallen, 98 to 99% plus. All these fiat currencies have fallen that momentum versus gold already. So there's only a matter of time, and I think it's in the short to medium that they will lose 100% of their value. So and that last, it sounds like, it's only going to fall another 1%, but that last 1%, that could see gold go from $1,800 today to $5,000, $10,000 in this coming currency reason that we've long talked about, and you can look at others in previous videos and blogs and market updates. So this is where we're at. We are in the end game, and it's time for people to, if you haven't already prepared, most of our clients have. It's given us all, I think, a window of opportunity to get our ducks in a row and be ready for what's coming, because we're in for a very rocky few months. So prepare, but don't allow yourself to be, I suppose, controlled by fear, or allow yourself to become irrational, because that can happen to people. It's important we get on with our lives. We take care of the basic needs in terms of our material needs, financial needs, but we also have a vision of where we're going in the world with our families and with our businesses. We'll come through this. It's just going to be a rough fight for a few months. So, it's important that we start, enjoying ourselves. That's what life is meant to be about. So, start. It's not doom and gloom. It's a very, very real financial risk, but we can have a good time. We can go out and spend time at Christmas with our families, with our loved ones. Be responsible, obviously. But make sure that you mark this festive season and enjoy it. It's been a tough year for us all, So we have to celebrate. We have to celebrate our lives. We can't live indoors in our houses in fear our whole lives, because it would just destroy the health of the vulnerable in particular, but it's destroying the health of the nations. Health-wise, but also financially and economically. Our civilization would actually collapse. All the gains that we've made over hundreds and thousands of years would disappear if we all went indoors and only came out on the very odd occasion with our masks on when we had to get some food. I mean, is that the sort of existence that we want for ourselves and our children? So prepare, but don't become fixated on it or obsessed by it. Just take the steps that need to be taken, and then get on with your lives and focus on where we're going to be in a few months and years. And we will come out of this, and ultimately there will have to be a mantra reset whereby the debt is written off. And when that happens, then we can get back to some form of normalcy and a real new normal that is actually based on possibility of sustainable economic growth over the medium and long term, and based, I think, also with a backing of physical gold to those currencies, because otherwise there is the risk again that the currencies will be abused and devalued over time. So thank you for your time. Yeah, I strongly encourage you to download the research, sign up for our research and our updates on GoldCore.com, and follow us on all the usual channels on YouTube, on Facebook, on Twitter. And look after yourselves. Take care. Bye-bye.